Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, we're live.
If this guy mentions pause and pivot, it's going to be it'll be an incredible firework display, I think, for today.
Yeah, I think that due to the volatility structure, I think that regardless of what happens and what he says, unless he comes out with something like a 50 basis point rate hike and just like, unless it's out of left field, I think what we're going to see initially after the initial algo reaction is we have a good chance of a drift higher, just because the hedges are unwinding. Similar to what happened in the last primary election, everybody was on one side of the boat hedged, and then it came off, and then we had a rise after after the election. Basically, the markets went up for about 2 or 3 days. I don't know that we're going to see 2 or 3 days of up, because this event is more short-lived, and so, but I do think we could go up later today. But beyond today, especially if we start getting over 4,200, I think it really sets up for a big sell-off.
Well, I seem to put call ratio at 0.7, so I don't know how many people are really hedged out here.
Well, the vol structure's up though, and usually when it's up, that's bullish. I don't have the chart, but I had it somewhere.
Yeah, I'm positioned. I'm positioned for a move up today and a dump the rest of the week.
Yeah. So basically, what we're doing is we got about 5 minutes until. Let's see. We got to update our countdown here. There we go. We got about 5 minutes until the countdown, or until the Fed announcement, and then I'll read off just what the headlines are telling us, and then we'll see what the initial price action is on the chart here. What we're looking for is basically a range to form, and then if it's a small range, we'll wait till the presser to finish the range off. If it's a big range, like violent range off the press or off the announcement, then that usually will put in the low and the high. Then from there, we box that out and we wait for them to break one side. Typically what they do is they break one side. That's the tell for the larger move. They'll come back in toward the middle of the range just to back test, and then shoot up to wherever the break was, either back up or back down. So that's kind of the game plan here as we wait for this announcement. But again, we think quarter basis points, all but baked in, all but guaranteed. That's what the Fed Fund futures. And interestingly, the Fed Fund futures, Bob, are basically, yesterday basically said that that's it. Like if you look at the forward future rates, they all nosedive. So they think this is the last hike, and they're still looking for cuts, but I kind of tend to agree this would be the last hike.
Yeah, I think this market reacts positively coming out of this Fed meeting. Then they're going to raise again in June. And then I think that'll be the one, because they're going to try to Jenga this market, and you hear the traders, especially the vol traders on the floor, are saying that the Fed is determined to kind of break this spell the market has, that the Fed is unable to bring speculation into balance.
Right. Yeah. Every little chance that this market gets to go up, they look for anything dovish. I don't know if I've seen in a market this fighting the Fed this much.
It's desperate.
It really is.
Well, it just shows you when you shove trillions of dollars into the hands of the bankers and speculators that they have a lot of toys they can play with.
Sure. Yep. I'm going to drill down. So this is a weekly chart, guys, and you can see that we had a little bit of, if you look left on the chart, this area was an area of contention and has turned into what I would consider the major line in the sand area for whether we go higher or not. And as we get back into this range, you can see we kind of bump our heads back into it. So that's why especially if we take out these prior swing highs here, this level here, 42.34 on ES. If we get up there and we take that out, like we come up, we wick that, get to this midpoint, come back in, that's going to be, to me, really juicy if this market has one last push up into it. we could also just not get there and roll over too. There's a lot of negativity under the hood here. You know, banks are in big trouble. If we do get up there, it's strictly going to be derivative driven as hedges come off, in my opinion.
Hey, Fed, is our live showing up on the in the room? I don't see it on YouTube.
Are you on?
Here it is. It just showed up. Good.
Yeah, I was gonna say it should.
No.
Well, the thing that tells me if we're live or not is showing the stream.
Is it?
And people
are commenting.
People see it. Yeah.
I don't wonder why I don't see it.
Thanks, guys.
Thanks.
All right, we're gonna get the news up here, and then we're gonna see what the headlines are.
Got a minute to go here.
All right, let's switch this to a 5-minute chart.
Here we go.
And here we go. All right, see what the initial reaction is. Down and straight back up. Gotta love these 10-point instant moves.
How long are you going to give the range for, Phil?
It really depends on how violent this move is.
It looks pretty violent.
You know, you can't discern anything within the first 10 minutes, in my opinion. So far, 20-point range, 25. And I'm just waiting for first. All right. Fed drops language that it anticipates more policy firming may be appropriate to attain sufficient, what's it say here? May be appropriate to attain sufficiently restrictive stance. They got the 25 basis point hike confirmed.
Okay. Here comes the dump now.
Okay. A little hard to see there we go. All right. Let's get rid of the countdown ticker for now. So just a really like Darth Maul candle here. Yeah, let's check on Mr. BT here. Well, you know, Bitcoin's been kind of chopping around in this area. It was chopping around this area last night, so I don't know if I'd call that dropping just yet. If it starts to roll over and starts breaking down below 28,200, then maybe so, yeah. Yeah, so this might be the range all we get until like the presser, like this market's waiting around for the presser. There really is not much in the way of headlines here. Fed says tighter credit conditions likely to weigh on the economy, hiring, and inflation. The extent to which more firming needed hinges on the economy. So the doves are going to say that the fact that they dropped the language saying that more firming may be required, they may take that as dovish. But keep in mind too, though, guys, that pausing and pivoting the other way means the economy's in trouble. And historically, that usually is chasing a recession.
Well, small caps are giving up their ramp preach at the moment.
Yeah, so we had a little melt up start earlier this time around. But again, like a lot of this range here, like it's just impossible to determine the move yet. Right now, we're establishing the post-announcement range. That's all we're doing. Still haven't gotten out of this 5-minute candle yet. Yeah, that doesn't surprise me that VIX dumped. But these are levels that you go long, swing long on VIX. Give it time.
We came down and touched a 1 minute 144 in IWM, and that held so far. I'd be more impressed if we start breaking some 144s and some moving VWAPs. Okay, see if we set a bigger range here. You're watching ES, Phil. I'm watching small caps. You know, 14% of the small caps are financial services. 15% are healthcare, and I'm sure there's a lot of biotech in that. Did they say anything in their statement about holding for longer, or just we're not going to continue?
No, that's that's all I saw there. It's very brief. Been noticing that lately. All right, so we're just waiting for the Fed presser now. All right, so we're down about 5 points from the rate decision. Let's see here if they said anything else. So basically, they've raised a quarter point. We're at 5 1/4 on the upper bound of the rate, and they've signaled that additional firming hinges on the economy. And now we wait for the presser. So that's in 21 minutes.
Maybe we have to play some bumper music while we wait.
Can't though, man. The copyright. Fed says job gains have been robust. Inflation remains elevated. And that's the thing. Today we had ADP, which came in twice as high as what they were expecting. So that's going to keep the Fed hawkish too, because they want jobs to cool off.
Yeah, the job openings was kind of hot too. All right, guys. Guess we'll take our naps here and wait. You know, the question is going to be is when are you going to pivot? You know?
Yeah, this now becomes all about the presser. Not Fed presser countdown is wrong. Let's see. You got to change that. It's not 3 hours away. It's 20 minutes away.
I know. Now they're just chewing up everybody's theta that went 0 TTE today.
I don't know why I keep saying 3 hours.
Yeah. See if anything flipped in the last 15 minutes here. FAZ is moving up a little bit. Some power is making a little bit of a move here last 15 minutes. SALV is making a bit of a move. So is DRV, which is the real estate bear fund, is moving higher, Phil. So what's interesting, the bearish real estate fund moving up and the bearish financials is moving up as well. CTRM has made a big move here in the last 15 minutes. That's pretty much it, on at least the watch list that I follow. I'm sure there's more.
Okay, so a little drift down here, expanding the range. Here's your 15-minute chart.
Okay, this is what everybody was waiting for, the Fed to pause. Where's all-time new highs at?
Oh, quite a bit higher.
I'm teasing.
4884.75, but you got to get through, this is giga resistance here.
You got to go through 3 other lower highs over the last 18 months.
And that's, I think, been the key here is that, you know, you're not making, you got 3 major lower highs. We're looking for another major lower high here.
Right here, actually.
You know, this could hold, and we don't get there. There's a gap here on ES up here at 4,300 plus. There's also a gap if we look on the SPX, which a lot of people have been eyeballing this. You know how it is when everybody starts looking at something, and that's right smack in the middle of its range there. So, you know, maybe we don't quite get there, or maybe we get there and then take that out and take out that high. But, you know, getting that gap fill cleanly at this point with everybody looking at it seems less likely. But again, for me, it comes down to, you know, what is the range going to be going into after the depressor? You know, what is that? So far we have a range from 41.22 up to 41.42. Not very big at all, actually, for FOMC pressors as of late.
The other thing we got to listen to is QT on the balance sheet. Their plans change, or they're going to still aggressively remove their balance sheet.
Yeah, that's going to be key. Balance sheet reduction, because balance sheet reduction will take away from the liquidity in the markets, and the markets start to go down. And then Yellen too, she's got some funds that she can kind of leak out back into the system right now, but you know, she doesn't have much.
No, they say the rumor is June 1st, but I think she's probably lying to try to create some drama.
Well, mostly everything that she says or forecasts becomes wrong. So big old gap there on the 5-minute chart. Holy smoke. That most likely will get filled back in. DXY chart. Yeah, let me look. Yeah, dollar is bidding up here a little bit. You know, one thing about the dollar is that it's taken out this major swing low here, and to me, that's a decent reversal point. I personally, I think it's basing. However, if we do end up losing 101 basically, and this thing starts to roll over, especially if you get something like where, okay, this is like, let me get rid of. So this is like support, right? So we break that, you're going to look for something like comes back up. This is probably a short for dollar and then heads lower. However, I think what we're doing potentially is basing here, and then we're going to kick back up higher. I think that's the move that's coming. This first area here, 104, you know, that's going to be pretty stout resistance initially, but you start cracking above this candle here, that guy, you start cracking above 106. I don't see any reason why we don't go target these highs. And that's where I think this ends up being part of the move of the bear market, where once we get up here, you know, that's your bear market is peaking, and which means, you know, markets are in the toilet, and you can probably get macro long. Yellen also announced treasury buybacks starting in 2024, which means they're buying back treasuries. I mean, they're not calling it this, but that's yield curve control. And yield curve control is the one thing that's going to send Bitcoin and gold screaming higher. So I think, you know, if they follow through on that, 2024 is going to be super bullish for gold and Bitcoin. They're just going to absorb that type of, because that's just, you know, it's another, whenever you start instituting yield curve control, you're sending money out into the system.
Yeah, just in time for the elections. Big surprise, huh?
Yeah, and last time they did do that before. I think 2000 was the last time. But again, I think they see the financial difficulties. I think they do see a big bear market, and that's the Fed's telling you we're getting a recession. They're announcing 2024 yield curve control. Essentially, they're basically telling you without telling you that we got a bear market coming. Yeah, they need duct tape. They need all 10 fingers and all 10 toes and a case of duct tape. Okay, yeah. Yeah, it doesn't surprise me actually. Take a look at gold. Gold futures. Gold is liking what it's seen so far. I think gold is just getting started on a very bullish run. Not to say we can't roll over. You know, if things do roll over, like if you look at what we're up against basically with Yellen and she's going to have to start issuing debt. You know, look at this move here from the beginning of 2022 down into September. I personally, there's a weekly chart. I think this is what's coming next for the market, something like this. And, everything pulled back, right? Everything except maybe Caterpillar. Yeah, S&P 500 pulled back, Bitcoin, big pullback. Bitcoin is the most volatile. But I think that's it. That'll be the final dip for gold and Bitcoin. And they may not go as low either. And, going to be what I would consider generational longs, getting into those. What did energy?
Hey, Phil, big surprise. ES is at 4150 for the millionth time.
Yeah, 4150. Well, it's right. That's big resistance. That's the resistance flip. Energy did really well though, while everything else was going down. Energy went up. Fed doesn't want this to happen. This is inflationary. All right, back to the star of the show, ES futures, the S&P 500 futures. Right. So this is our announcement range, but because it's only about 20 plus points wide, we're gonna wait for the presser to finish putting this range in. Then when that's done, we're going to wait. If this was much wider, like, 60 point range or something like that, then I would say that's the range, especially if we came back to the middle. But yeah, Bob, we're basically right back towards the when they announced the rate decision.
Yeah, it's pretty amazing.
All this did was clear some stops and stuff like that. Now, I'm not surprised there's a bit of a drift up here because I think there's some initial releasing of hedges going on. Bitcoin's holding steady at 28,607 or so. Positive ticks are coming into the market. That means there's broad lifting of stocks. Natural gas. We can take a look at natural gas.
They're pushing the market up higher now.
Yeah, I think this is what I thought might happen is we get a drift up overall. And I wouldn't fight that drift too much, but especially, what I've noticed, if we get a positive presser, positive day on Fed day, it's the next 48 hours you gotta be leery of. And the next 24 hours, is game for putting in a top. Well, if the dollar goes up, which it seems like it's wanting to, then the Euro USD is going down. Let's see where we're at on that. So 5-minute chart, Euro USD spiked initially, potentially could come back and take out the initial spike. If it round trips this, then I think we're gonna go lower. The initial reaction on the dollar is down, but you can't really make heads or tails of this yet. Not necessarily Cobra Joe. That doesn't always happen. There's times when it rises together. Yeah, especially in a recessionary environment.
Exactly. 25% of the time, gold and the dollar rise together.
BTC USD holding up pretty good. So, Bitcoin's these are major lows here on these weekly candles, these weekly wicks. So, I thought that, if we can get another push up, this is one push, two push, you get a third push, you're probably going to test these lows up at 34. But that remains to be seen. Like I said, if the market starts to roll over a la the first quarter of 2022, so is this. Right now, this is your bull market high. I'm just treating this as a bear market high, which means a lower high. I just don't think we're just going to be taking off for another bull market. Bitcoin would have to completely decouple and be just day after day completely ignoring the S&P 500. But I mean, if you put the S&P 500 on here, they're kind of going up together. So I can't quite say that it's totally decoupled yet. It's outperforming, I would say, to the upside at the moment, but not sure we can say that's decoupled. Decoupling would be S&P 500 is just going down, and then this thing just continues to go off for weeks and weeks. Then that's a true decoupling. I just don't see it yet. We have moments. We have fleeting moments. I do think that if you look at the crypto market, especially altcoins, and you got some of these meme coins that are still, going crazy, that we haven't seen the end of this yet. There's going to be the winter, the crypto winter hasn't really come. Started to, it hasn't really come. You got to get to the point where all of those crypto charts are just basically flatlined. So this is the crypto market cap excluding BTC and ETH, right? So I think you're going to see, let me change this a little bit. I think what you're going to see is, I think we're going to eventually get down in Eiffel Tower, this higher move. So that means that the altcoin market cap is going to come back down to these, basically this is pre-COVID levels, right? The crypto market cap is a great representation of the excess liquidity in the system, right? This is all from the Fed, basically. So as much as they hate crypto, they sure did it a bunch of favors for what they did. but great representation of excess liquidity in the system. Fed's hell-bent on getting their balance sheet rolled off and all of that stuff. So, you got another big drop, I think, coming ahead of us as we get to the end of the year. And I think once you see this market cap on total 3 get back to these levels, this baseline, then start looking for, long term swing trades. When I say long term, 12 months and on some of the better names. All right. So we got about 50 seconds. And we'll bring up, we'll see. He'll start talking. We'll get the announcements here in a second.
Got a Kona buy on SunPower. That thing started off strong, but fell off. IWM fell back into the range, Phil.
Let's look at IWM, Russell Small Caps. They've been having a good time today.
Well, yeah, they're expecting pause, then pivot to save the banks. There he is. The man, the myth, the legend.
Okay, so we're gonna basically watch the reaction because the announced or the comments are coming through on the headline, so we're gonna see what those are. So initial reaction negative from the comments here. This is now what we're gonna get into here is he's going to say what he's got to say. We're gonna get the headlines here in a second, and I think what we'll see is once the hedges start to release, we're gonna see some up pressure. Now, if this thing doesn't start cracking the ranges here, then I'll say the range is in. But I want to see a pretty swift range expansion at this point. We're getting some minus ticks coming in. You're welcome, Cobra Joe. And if you guys don't mind hitting the like and subscribe button, that would help us out a ton. And notifications to all. That makes a big difference on those algorithms. Because we're just doing this for the love.
Yeah, definitely not for the compensation.
No, not getting anything here. Okay. Powell says conditions in the banking sector broadly improved since early March.
What?
Man, they must be worried if they're going to lie like that.
Pinocchio.
Headline says Fed opts for dovish 25 basis point hike. I mean, they're just desperately trying to spin this thing dovish. Powell says they're strongly committed to bringing inflation back down to 2%. That's hawkish. Fed's Powell says we will use data to determine the extent of future rate increases. That I think was somewhat expected. The Dove bros are going to interpret that as dovish because they're going to say that's open, leaving the door open for a pause. We will take a data-dependent approach to determine the extent of further rate hikes. The U.S. economy slowed significantly. Well, algos don't like something he's saying. So this might be our range here. Usually when he starts talking, I'll look for a quick expansion, and I'm not seeing it here. So if we continue to chop around for another 5-10 minutes inside this range, I'm going to say that's the range. Then we're going to see which way this breaks. So I'm just drawing the midpoint of the range. Because a lot of times what will happen if this breaks down, it's going to come back, and then we're going to look for this to hold. Powell says U.S. banking system is sound and resilient. We just had over $500 billion in bank failures, so it's sound and resilient. Inflation pressures continue to run high. Wage growth has shown some signs of easing. These are all Powell's comments. Powell says the pace of economic growth in the Q1, the first quarter was modest despite a pickup in consumer spending. So we got a little peekaboo outside the range on that candle there, that wick. Now we're getting a further push down. So I'm looking for basically a move back to this midpoint.
Interesting. This happened before, and then when he gets done talking, they try to do an end of the day ramp, guys. So just bear that in mind too.
And this could be still range expansion.
TW I'm doing here. The Qs just went red. SARK's starting to get a little bit of a bid. Nope, pulled back again.
Big jump back up.
Yeah.
Big jump back up.
Yeah, Qs just jumped a buck.
The trickier part is when we start with a tight range is whether or not we still consider part of this the range expansion. I'm kind of thinking this is still part of the range expansion myself.
Wow. Look at this move on SPY.
Yeah, we just jumped up 20 points in a heartbeat. Let's see here. Powell says the economy is likely to face headwinds from credit conditions. I think that was the part of the dumping down. We are prepared to do more if more is warranted. We'll make decisions meeting by meeting based on the data. All right, so I think we're getting the narrative here of just, we'll see, right?
Yeah, the Qs are at 321 now.
They're not. What I'm not hearing is anything regarding cuts.
No.
Powell says is Fed strongly committed to fight inflation and sees a long way to go. What I'm looking for is him explicitly saying no cuts for the rest of the year. Fed swaps, which is the futures that basically try to forecast hikes, they're showing firmer June hike odds, but still below 1 and 3. So
Mara likes this. MARA likes this move.
Well, that's interesting because Bitcoin's dumping. Usually they're somewhat attached to the hip. Powell said a decision on the pause was not made today.
There you go.
No pause. Well, the Dove brothers are going to say, well, he didn't say no. He didn't say they were against the pause.
You should say, we really like what Australia did.
Okay, here is more expansion.
Just popped.
Yeah. Remember now we can get
wow. There you go.
Yeah, this is the effects of hedges coming off too.
I told these guys yesterday we're likely to erase that whole sell-off from yesterday, Phil, and we just did.
Yep.
There's a gap up here on SPY that I think they just closed.
Let's take a look.
We're pretty close. Let me go over there too.
Quite.
Pretty close. Let's see, where's that gap at?
414.77 to 415.52.
Yep. I wouldn't be surprised if we got there.
Yeah. I think this is, so going back to the range, guys, I think, this here, we're just going to call this the range now. I think we'll see this chop around. We should get a move one way or the other that takes it out. That move is going to tell us probably the longer term direction of things. But before we continue in that way, we'll move back to the middle of the range. So it's just like this algo pattern that they do on these announcements. But lately, the ranges have been smaller off the 2 p.m. announcement of the rate, and they're keeping the comments really brief on the 2 p.m. And the range has been smaller. Before, the range would be really wide, and that would set the range. Then the presser tends to widen the range, and then we wait to see which side breaks first. So
we're back under 413 now on SPY.
Yeah, that was your presser range expansion to the downside and to the upside. So I feel pretty confident with this now being the FOMC range, and now we wait to see the pattern play out.
Whoa.
Yeah.
The vomit comet is in play right now.
Yeah. So that's your range expansion. Okay. So now from here we're gonna see which side
wins the game.
If the hedge bros are right, and then the hedges unwind, and eventually this comes up, takes out that high, we'll come back in. You'd want to get long in here and then rally into the night. Powell, no one should assume the Fed can protect the economy from a failure to pay bills on time. So he's referring to the debt ceiling debate that's starting to become front and center. We've been warning this is going to be front and center. It'll be a hot topic over the next few weeks.
Yeah.
It is essential that the debt ceiling be raised in a timely manner. You know why they're worried about that, Bob, is because if the credit ratings go, the banks, not only are the banks in trouble, they're probably done.
Yeah.
And he knows that it's going to be they're going to have to print. The staff predicted a mild recession in general. However, my forecast is for modest growth, not a recession. Mm-hmm. That means that 1,000% guaranteed we've got a recession coming.
Yeah. It's just so funny. The Kramer effect. And Kramer called for a pause, a pivot, and a brand new bull market. So just FYI.
Well, then he doesn't know what he's talking about, because a pause and a pivot don't come with a brand new bull market.
No, but his handlers are telling him so they can get more retail to buy.
Sure.
So he's not an idiot. He's just a crook.
Powell says economic consequences are highly uncertain if there's no debt deal. Well, I can tell you with high certainty it's going to be a mess.
Yeah. Let me help you, Jerome.
Is the thing, right, guys? He can't tell you the truth. The market would just freak out. They're beholden to the market algos. The market algos basically force them, shape the way that they announce. Okay, that's how powerful the market algos have become.
You ever see that movie Liar, Liar? Can you imagine if Jim Carrey was the Fed president? Oh yeah, we get sweetheart deals all the time to people, as long as you're an insider.
So for you guys, saying that, these moves are just ridiculous and, it's just scam and blah, blah, blah. And I mean, a lot of the market is scammy, but that's the market, right? And so the reason why you're seeing a lot of this is, you have to think about how many different markets trade in the S&P 500. It's the world's biggest, index, right? It's the largest market in the world. And you have a lot of cross currents. And so you've got volatility funds, you've got different hedge funds, you've got just everyone's got a different way of correlating the way they invest. And you've got hedges and people positioning. And so what it is just when you get the announcement, you got hedges coming off, you've got people repositioning, you've got rebalancing. So you just get a lot of chaotic movement. However, the range ultimately is going to paint the picture of where the overall market wants to go. But a lot of this stuff, like inside here, total mess until the market shows us which way it wants to go. Like really pointless, in my opinion, until one side of this now breaks. This is what I was looking for, was fairly wide range. Now we got 4130 to 4166, 36 points. I mean, it's not huge, but the way that we've expanded 2 times now tells me that we're good to go now. So from here, which it's just a matter of which side breaks. And it's just our current atmosphere with how the algos handle the announcements. In a couple of years, it'll probably be different.
Yeah. We're just hanging on the 144 and the 1 minute on SPY, Phil. Baby doesn't want to leave home base. Moving VWAP's at the same place.
Powell says many banks are now focused on liquidity. You think?
No shit, Sherlock.
I don't have any plans for additional bank consolidation. Oh my gosh. Today's opposites day.
I know. You don't have plans.
Yeah, you don't have plans. You don't have plans.
Okay, so we're going to get a recession. We're going to get bank consolidation.
Yep. Yeah. If they didn't want bank consolidation, he would be pausing. All right.
Yeah. So, Phil, we should invent a chat GPT called Fed Translator.
Take everything the Fed says and do the opposite.
Just translator. What he means to say is you're forked. What he means to say, put all your money in JP Morgan Chase.
Somebody says they should ask him at the presser, does he plan on making JP Morgan bigger than the Fed and your idol Jamie Dimon even richer? That'd actually be funny if he actually got real questions.
Yeah, that should be by law. Random questions from the audience. Yeah, self-selected. If you ask a bad question in their eyes, you just never get invited back. Just same with Jean-Pierre. You know.
Yep.
Didn't like your question, you're not invited back.
I don't know if it's on YouTube still, but Janet Yellen got asked a question that was out of bounds, and the look on her face was like terror. Like she looked over, you could see her looking off to the left, like she was looking at one of the handlers, and you could just tell like that was an off script thing. And I think they followed up and said that guy was not back at the next one. Yeah, I think they have to all submit questions ahead of time.
Yeah, I did. I don't call it presentation. When you go to the planning commission, you get your 3 minutes of fame, and you got to fill out a whole bunch of stuff about who you are, and then whether you're for or against it. And you better not lie on the sheet. You know what I mean?
All right. Paul says it's good policy that we do not want the largest banks to make large acquisitions, but the acquisition of something is an exception that follows the law on the least cost bid. Acquisition of a failed financial institution is the exception that follows the law on the least cost bid. I think he's addressing the fact that why JP Morgan was allowed because of the 10% rule, 10% of deposits. And there's an exception to the rule that they can acquire a smaller bank if it's deemed that that bank poses a systemic threat. And again, that comes down to really what the Treasury deems it qualifies. So at the end of the day, it still comes down to Yellen can basically dictate whatever she wants with who gets gobbled up, who doesn't, which depositors get saved, which depositors don't. And so that's my problem is they're going to force, that kind of mentality is going to force more people out of the smaller regionals because those are the guys that are in big trouble, especially those guys that you saw the video, what was it, yesterday? We showed you all of those banks with CRE exposures. If you're in those banks, you'd be crazy not to run to JP Morgan or Chase or any of those guys because your deposits will be safe there no matter what because it's a GSIB, right? Globally strategically important bank.
Well, whatever he said, they're selling now.
Yeah, this is interesting.
We're going to break the range to the downside.
Yep. All right. So what that tells us is if this breaks down, now it hasn't broken yet though. So
nope.
That's why this range becomes important because all this stuff doesn't count until it breaks. Now, if it breaks down, normally they'll push down a bit. I would suspect 4120, and the reason for that is because that's where the big strike level is for options. 4100 on SPX, we're about 19 points differential, so about 4119. So I would not be surprised to see a move down to 4119. We can even put that on the chart, and that would be where I would look for a bounce to come back up.
They're definitely keeping the 0 TTE options plenty liquefied, Phil.
Look at that move back up.
Yeah.
Powell says more data will be required before we can declare that we have reached a sufficiently restrictive stance. So now he's waffling on whether or not they've gotten to a restrictive stance. That may be why the market's split lower. Hard to predict how much credit tightening will replace need for any further rate hikes. And that's the thing. They want ultimately the credit tightening to, so I mean, that's what they're telling you guys, is that, you know, the banks are going to not be lending as much. Think about that. You're not going to get car loans, or they're going to be much more difficult to come by. You're going to have really good credit. You know, business plans are going to have to be really appetizing to the lenders. Otherwise, you're not going to get funded for your business plans. That's bad for tech. That's bad for Silicon Valley, because those guys rely on cheap debt to fund their little dream projects.
Biotech.
ATAX Partners, how are you? Thanks for tuning in.
So, Phil, one of our customers says his bank is no longer doing personal loans at all.
Wow. There you go. That sucks too, because if you're trying to consolidate debt, trying to be responsible, makes it difficult.
Yeah.
Though most people with personal loans aren't consolidating debt, they're just adding to it.
Yeah. Wait till I think the Bay Area is going to be an absolute disaster.
I agree. Well, what was it? Nordstrom closing 2 big stores in downtown San Francisco. They're over it. Like
Anthropology closed too. So it's going to be a wasteland. Nobody's going to go there for tourism either. I mean, it may be the first city to go from being extraordinarily rich to bankrupt.
Well, you know, the shoplifting's out of control. I mean, every day on Twitter, I see someone posting videos of people just cruising in. They put the mask on, like, you know, and they walk in and they start piling stuff into their bags, into those big shopping bags, those reusable bags, and walk out. Nobody does anything.
Nothing.
I saw one today. It was one of the supermarkets. I can't remember what part of the country. I think maybe Midwest or East Coast. But anyway, this lady just had a shopping cart full of meat. Like, she went in there, loaded up the shopping cart, went out to her car and just started throwing it in the back of the car. And one of the workers came out there trying to stop her. I mean, it's just like, it's so blatant. It's crazy.
Yeah. And in about 6 months, she's going to have to drive 10 miles just to get to a grocery store in the county where the sheriff will arrest you, you know?
Yeah. It's very lawless. Very, very lawless.
Yeah. In about 2 weeks, we're going to get an immigration surge too. You know, just the social compact's going to break down. I'm just trying to figure out what city goes first, you know?
Let's see who asked about oil. Feral Hog. You sound like a wild guy. I think actually this structure here at the higher low potentially could just bust up out of here. You can almost make an argument for a cup and handle right here. So easiest thing you can do. I don't have our indicators on that naked chart, but I think once you start popping over that trend line, you can make argument for retracing some of this move. Obviously, you're gonna have resistance up in here, in this area, but if it reclaims that, and then you also got a pocket in here too of resistance.
Yeah.
But I think you get it back above that, watch out, because then this whole area up here, in my opinion, you know, I think this whole area can get backfilled. So that's, you know, from 70 on up to about 7150 or something like that.
Yeah, they'll start turning into taps off soon.
Let's look at DXY here, see if it's cranking back up. So DXY 5-minute chart, that's fairly bullish too. Because you basically dipped. So basically you had compression here, right? And then you had the false breakdown, came back above. So what I would want to see is this area here. Want to basically see that hold as support, more or less. Let's check on our friend ES. Still suffering through the mental illness that is the algo washing machine. But make no mistake, that is now the range. Personally, I think that once he stops talking, hedges come off, and I think we see this thing drift up, and then we're going to get that initial break higher. But I will stand to be corrected if this does end up falling back through and taking out that 41.31 level. Let's see. Powell says policy is stringent, trying to stay at a sufficiently restrictive level in order to reduce inflation. Perhaps we're not that far away from a sufficiently restrictive level. You know, it's funny because, Bob, early in the year, they were saying there was times when some of the Fed governors were saying that they have reached the restrictive level.
Yeah.
And now he's saying, nope, we're not there yet. So DXY is firing a 4-hour buy signal. So that would imply we see more up going into tomorrow. And, you know, S&P 500 can go up with dollar, but normally that doesn't last too long.
Yes. Symbiotic broke 25.
Wages are still higher than the 2% inflation rate over time. So he wants that. He wants a much cooler job market. So basically, you know, not much has changed. He's basically still of the stance that they're going to get to 2% inflation. They want the job market cooler. He did omit about specifically talking about a pause and a cut. He didn't say that a cut was off the table for the year. They're just not even talking. Now they just went to data dependent. But I'm going to tell you something. That means they're worried. Powell says the case of avoiding recession is more likely than having a recession. Keyword likely. It's possible that we will avoid a recession. That doesn't mean anything. It's possible it might rain tomorrow.
Well, out here it will.
I think it will here too. John Doe, you are right. And the liquidity chart, I'll put that into perspective. John Doe, he makes a good point. What do we deserve to be up here? I'm going to show you guys this liquidity chart. If you guys haven't seen our videos or are new to the channel, hit like and subscribe, smash the notification bell. I'm going to show you what we've been showing these guys for a while. And while we wait for this range to break. So this is the liquidity chart. And basically below here is fair value. And basically these circles are telling us when things are oversold or overbought relative to fair value. See, the blue stuff is liquidity, and that drives, it's essentially the fuel for the market. It's a combination of the balance sheet, the treasury checking account, and how much money the banks are parking at the Fed overnight. Now, when the Fed went to town and released a bunch of dollars into the system, here's what happened at COVID. Huge, you're talking historically massive amounts of M2 dollars into the system. Okay. Right. What was the market supposed to do? All it could do is go up, because this goes into the market, regardless of what anybody thinks. It always goes back into the market, directly or indirectly. So then what happens? They stop, right? They end quantitative easing. So quantitative easing's buying basically treasuries from Yellen, turning around, converting that into dollars for the banks. Banks put that into the market. So that was all through here. Then they stop, right? 2022, they said it's over. We're going to start rolling off our balance sheet. So they're reversing the process. Liquidity goes down. What does the market do? Comes down. Now, in the last, since middle of 2022 on net, this has been kind of going sideways, right? Minus the gyrations, but it keeps finding center. And that's why this market's been kind of hanging out in the 4150 area for so long. Sometimes it's over it, sometimes it gets under it. We get overbought, oversold, but it's because the treasury has been fighting the Fed roll off. Well, that's going to come to an end soon. Yellen's going to be forced to issue a lot of debt. It's going to drive up her account. Her account going up sucks liquidity out of the market. Okay. So eventually we're going to get another episode like this where the liquidity drops and this market's going to follow it, and gold and Bitcoin to an extent is going to follow it lower too. So it doesn't bode well for the second half of the year. So even though it might seem on paper that the debt ceiling raising is a positive thing for the markets, and it is positive in that, the government doesn't default. However, it's going to kick off basically where the liquidity drops quickly for the markets, and the markets will start to drop. So on net, it'll be a bearish development once. So that's kind of like, to me, that's going to be like, red flag for, things going south, or starting to go south, I should say. If they don't raise the debt ceiling, it's also already going to start causing trouble. So, double bad would be that the debt ceiling fight gets really entrenched. We do start to potentially get defaults. I don't think right off the bat they will, because they can finagle some things to make sure that the interest payments get paid on some of the debt that's outstanding. But they will shut down, parks and, national museums, and anything non-essential is going to be shut down, which also will kick off a recession because people won't be spending money.
Yeah, they'll furlough all the federal employees too.
Yeah. So I don't, as much as it's easy to say there's going to be a default if we don't raise the debt ceiling, they can stave even that off for a while too. But at some point they're going to have to raise it.
Here we go. Run to the top of the channel again.
All right, let's get back. So anyway, to point being, they're draining this out, and you can see where we were and where we can come back to as they continue to drain this out. And they're going to be draining this more as we get into the back half of the year. So I just wanted to put that into perspective based on John Doe's comment there. All right, so back to the markets. Chopping around the rate decision level, going nowhere, which is fine, because that just further confirms this is our range that we need to break.
It's fine with me because I have a bunch of credit spreads on that are draining out of life.
Cameron, 15K area is a great candidate for a low. And I think I think if you get back to 17 and under, I think you just have to start programmatically adding to your long-term allocation versus trying to guess where the bottom is, because anything in that zone is going to be, is going to have huge returns going into 2025. They've essentially announced yield curve control with the Treasury buyback program they want to implement in 2024. That effectively is yield curve control. That's what Japan's doing. The government's buying its own bonds. And they're doing that. They're announcing that because they know they can't have interest rates flying off the handle now. It's unsustainable.
I'd like to know where she's going to get the money to do that.
Yeah, well, you know, she's going to get the money. It's from the Fed. It's going to be inflationary. And that's why, you know, the Fed, because the Fed's going to have to go back to QE, right? If they go back to QE, she's got all the money in the world to do that. And that's why gold and Bitcoin are going to take off.
Whoa.
All right, this is kind of important here, guys. This
we went top of the range to bottom of the range like in a minute.
Well, that's the second time we've banged that.
I think this thing, when he's done, may dump, Phil, not go up.
That would be, I'm going to say that would be not the way I thought it would go, but you know, you just trade it. And if we do dump, then I think look for 41.20, 41.19 to hold, come back up. Think people are going to think this is safe, and then it dies.
I think the market's getting really good at topping Powell into his pressers, you know, for the weeks ahead, because that's what happened last month too. But you know, who knows? I think you're right. Just play the breakout either way.
Yep, that's what I do. Just gold's not happy, and BTC USD, it's not happy. So it came down to 28.2, not the low of today so far, but they're not happy. They're not happy.
No, I'm seeing a turn on all the watch list stuff too.
I will say this, guys. This is the most, I would say, spot range that I've seen in a while. Usually we're getting a direction now. They're about ready to tell us that this market wants to go short.
Well, we just broke the range again, down.
Nope.
No?
Not quite.
I guess I'm on SPY. Let me look.
You know, I will say this: you can get buy, like you can put buy orders, and this is mostly for futures. You could put buy orders down here at the very bottom because you can have a really tight stop. And the way that this thing's bouncing around, you can get 4 or 5 points really, really quickly because they do like to game the edges of these ranges once the range is established.
Yeah, 410.29, Phil, came down to within pennies of it. And if you do that, you got to go a little bit above inside because they like to tease you right at the edge of it, but not at it.
Okay, it broke.
Now we broke it.
Now, I'm not really excited about that break unless this thing really starts to push down, gets down to 41.20, and then I want to see it come back inside. To me, that's textbook, right? So what lately the algos do is they do one of these deals. They get to a support level. I think it's 41.19 because that's the big gamma level. Comes back up. Everybody thinks, oh, head fake. You get back to the midpoint of the range, and then later on, this could be over the next day or two, sayonara. But typically, this is where if we start to get some of this acceptance lower and it comes back inside, this is where you look to get short.
Well, here we go. We broke 410 on SPY.
If 41.19 doesn't hold, I look for 4100.
IWM's giving up the ghost to 173.66. The Qs are 318.74. SARC is 45.75. If SARC goes green, then I'll be impressed.
Right. Let me see if there was anything specific that he said. FOMC's, this is 2 minutes ago, FOMC's inflation outlook does not support rate cuts.
Ooh, bingo.
There you go. That's why it went down.
Bingo was his name.
Powell says we should not even be talking about a world in which the U.S. doesn't pay its bills. Well, now you know that we will be talking about that soon.
We never pay our bills. We just print more money.
If inflation stays high, we won't cut rates. Well, I'm going to tell you what, there's some stock market drops, you can be cutting rates.
In a heartbeat.
That's all that matters. That's why it dropped there, guys. Because the market, it looks like to me, the market was looking for the rate cut. Remember we were saying earlier, he hasn't mentioned that at all. He waited.
The rate cut boogie, baby.
He waited till 40 minutes into his presser to address it. That's pretty wild. I swear, they were probably like watching the market.
They probably asked ChatGPT, when should I give him the bad news?
Yeah.
You should give him the bad news 40 minutes into your presser. Nobody thinks anymore. Did you see the company Chegg, Chegg? It's going to go out of business, guys. It dropped 80% today because they couldn't get a guidance because nobody's buying their educational stuff anymore because the kids are just getting on ChatGPT and it's just basically become a free version of that company. IBM, 7 million, not 7 million, what would they say? 7% of their workforce is going to be obsolete because of ChatGPT. Well, AI in general. So my daughter is a stylist, and she was reading to me this morning before she left for work. She said, Dad, I'm reading about hairstyle and AI. She goes, what the heck is this on my timeline? So she goes, I got to read it. Can you imagine a robot cutting your hair?
Oh, Powell's going to be, this is one of those days, I think, Bob, he's going to be speaking until the end.
Yeah.
So the market has spoken. The range is broken.
I love that. I love that, Phil. You're a poet, and you don't know it.
Powell says the Fed's attention will now shift to credit tightening.
There you go. Well, I'm supposed to be the pithy one here, Phil.
Some softening in labor market, but still too strong. Prices and corporate margins will fall as goods pipelines return to normal. Wage increases need to be closer to 3%. You know, what do you think, Bob? Stagflation?
Yeah, I'm going to start looking at my long-term portfolio, see how this is being affected.
Powell now says possible we'll have what would be a mild recession.
Well, that means medium to heavy.
He just got done saying it's likely we won't have one.
We don't need ChatGPT. We just need to do the opposite.
Rate cuts would be inappropriate given our belief that inflation will take some time to subside. Large bank deposit flows have finally leveled off.
Oh, not too
All right, we're coming into that zone, guys, 41.19. Again, that is just a large gamma level, meaning that there's a lot of open interest on this strike as it pertains to the S&P 500. So the SPX is the index for the S&P 500. We're looking at the futures. Futures are about 19 points or so higher than the actual S&P 500. So 41.19 is basically the equivalent to that 4100 level, round number. And that's where all the open interest is. So like I said, as I sketched out here, I'm going to leave this up, see if we follow it. But looking for this to bounce. If this doesn't bounce, we could get a lower move down to 4,100. That's the round number on ES. There is some support there as well. But ultimately, we would look for this to march back inside this range, and that's where I think we're going to start seeing the bears get into this and start shorting the market. Let's see what else we got here.
So TLT is pretty flat today. I expect that should move higher if this continues. And SARC now is almost flat for the day, Phil.
Powell says he's had a few regrets.
Trading regrets or?
All right, let's take a look at the gold buttes, see what they're doing. Gold's recovered here. Let's look at the dollar. That's holding over that level we were looking for. Let's look at the euro dollar. How is the euro dollar going up with the dollar? That's pretty cool.
That's interesting.
Oh, because the dollar just dumped back down. That was quick.
All right, let's see here. Moving VWAP's at 410.94 on the 1 minute SPY. We'll see if that holds it or not.
Yeah, Bitcoin's riding the struggle bus here.
Yeah, I think I think it's gonna be no bueno at the end of the day.
Well, yeah, I think the break lower was the tell.
Let's see where the Qs are. The Qs can't like that. Well, they're down to 319. Where's IWM? IWM is down to 173.70. Okay. SPY's dancing around 410.
So we're just hitting the bottom side of that range. You can see where that's, trying to fight to get back in. So if it starts to come back in, we'll watch for that to grind back up. And again, toward that 50% mark.
Microsoft gave up all its gains, Phil. It was at 308. Now it's at 305.50.
Let's take a look at NQ.
Excuse me, buddy.
NQ, pretty much the same boat. Let's see, down to range lows there.
JP Morgan's down almost 270 now.
Yeah, NQ and ES are in very similar situations.
But I just don't know how these financials make it.
I don't either. But this is very bearish. This basically tells me that the scenario for unwinding of hedges to go higher is not right now, not in the books. The only way that I would change my mind on that is if we broke this range high. But the way that the algo pattern has been working out, not likely here.
Yeah, I agree. I think we're going to leave the panic stage, Phil, and start going to the prayer, the prayer level. DEFCON pray.
Powell says there was a lot of support for raising interest rates.
Great, thank you.
Getting my big negative ticks.
The dogs came in to visit. Good thing they didn't burst out into song. Sorry to disappoint you guys. No other zoological incidences are happening today. No hummingbirds, no spiders. Let's see.
Yeah.
Whoa, Microsoft just broke down here pretty good. It needs to get under 304. Then I think the Qs should really start breaking down.
Yeah, John Doe, that's true. The minute he stops talking, it's like, all right, next.
Is he done?
He's done. All right. So now this market, the algos are no longer listening and reacting to what he's saying. So he's done. And there's that 41.19 level. We finally tagged that. This is where I look for, if this is going to hold, then we're going to start seeing a reversal. I would look for this to go back up into this range. Now, if this does not start to hold and we start breaking down and we come back up to this from underneath and reject, then I think we got 4,100 on tap. Whatever this move, wherever it bottoms, though, the likelihood is that we'll see a push back up over 41.31, and you're going to get basically a sense of relief from the market. Right now, everybody looks at this move and is saying like, oh, that's it. The market's going to sell off from here, right? If you didn't know better.
I'm watching Microsoft. It's down to the 144 now on its 15-minute. So it's been trying to put a rounded top in here for the last couple days. Has a big gap down at 276 area. So massive move higher on single-digit revenue growth. I think it's one of the last hideouts. Okay, SPY's down to 409.20 now.
Yeah, we've hit the 41.19 level. We're getting a reaction off that. So you guys can see how that is important. There you go.
IWM 173.45. Yeah, Microsoft got a bounce there too off of that, whatever that was, Phil, that level.
Yep, that's our high gamma. That's our big gamma strike at 4,100 SPX.
Yeah, they shot it up a point.
So now, so far, guys, pretty par for the course. Like I said, we're going to watch for this to come back into 41.31. So we're getting some positive ticks coming back in now. So broad market buying, basically.
Back under 410 again. Let's see it. Nope, held.
Yeah, so you guys notice let's switch to a 1 minute chart. You've noticed the initial break of the range, right? Come back up, reject, finally get down to our 41.19 level, bounce, fighting to get back in the range. This is very standard stuff. And what I'm expecting is this to grind back to this midpoint of the first part of the range expansion that happened off the presser and the announcement. So it may take some time to chew on this. I do expect them to let this back in and go back up.
Well, it's going to happen in the last 10 minutes, Phil. Been my experience.
Agree. So, basically you get your pre-announcement drift up. It started a little earlier today. Usually I like to wait till about an hour before, but just because there's, not sitting in that trade, especially if you're in options with theta decay. But announcement, range expansion, presser expansion. This tells us the direction the market wants to go. We're going to retrace some of this break, most likely. So this is just chewing on. So you got to think too, the market makers and some of those guys, they're holding part of the reason, like, well, why doesn't it just shoot back up? They're balancing books. They're getting ready for the move to go higher. So they gotta have this chew on this for a little bit and get positioned. Once that comes off, that release, then you'll get that move back up. Yeah, John, it's just, the hardest part on that is trying to figure out what is going to be the range and what is going to be the range break. Today, the last time that we had to wait for the presser to give us that, and saying this is very similar to the last one. It was a smaller range on the actual announcement itself, and then the presser finally finalized the high and the low of the range. And it's the high. It's the one to go with because you sit at this point. You're over an hour into it. It's pretty well established, and you're hanging out in the middle, and then you leave the range. Okay, so very textbook in the current environment here. What would not be textbook is if this fails and this just takes off and goes lower.
He just pretty much told the heroin and fentanyl addicts that the pusher is about 5 blocks away, not across the street.
Yeah, and isn't interested in more sales.
Yeah, he's pointing you to a methadone clinic right now.
So the pundits are saying that the Fed decision was non-committal. I'd say that's fair.
Yep.
You can see how important that range is, right? But this is important too. This is not a chump level here at 41.19. A lot of open interest there. SPX options market's really, really important. So is SPY. I think SPY, where are we at? Yeah, so SPY had a lot of open interest at 410. Yeah, this is pretty bearish. We've double bottomed here. So the bulls are going to save this and poke this higher. It's going to be here. Otherwise, that's 4,100 is going to look more likely. Okay, so now what we have to watch is that 41.19 doesn't turn into resistance. So bulls got to get back above that real fast. But if this comes up, tests this level, and then rejects back down, probably going to bring us down to that 4,100 mark. And it's still possible, too, that we can go down to 4,100, come back up later, get back into this range, and then still get back up to this level. But right now the bears are in control unless they lose this and we pop back hard over 41.19. Jeffrey Gunlock says recession odds are pretty high right now. And I would have to agree with that. See what oil's doing. Let's take a look while we're waiting for this range to resolve. Oil's not real happy. Gold's doing okay. Bitcoin's hanging in there. Bitcoin needs to break this trend line down. DXY is hanging in there. Remember that support level we talked about? Really, that's more like here now. But if this starts to push up and get back over that 101.50 area, watch out. That'll be risk off. Should be risk off for market.
Good. Bombs away on SPY.
Agree, Charles. I think that ultimately on the weekly chart, it's putting in a base, and I think it does have a multi-week run higher. That should bring us our next leg lower on the market that we've been cautioning about. Yeah, so this is not good, especially if this pushes up and tries to back test that 41.90 from 41.19 from below. This is really bearish. I would say the odds now for this market, this high here at 41 or 42.06, I think the odds of that being our lower high for this bear market rally is very, very high now.
I agree. I agree, Phil. Okay.
Mortgage rates. Here's the thing about mortgage rates. It used to be all about the 10-year, but then now what they do is they take if you're not familiar, the MBB is the ETF for mortgage-backed securities. So if you want to invest or trade mortgage-backed securities, you have to do it through MBB. And mortgage rates are inverse of the MBB. So as mortgage rates rise, this drops. Now, if this is going to crank higher here and break this trend line, then mortgage rates will drop. Now, I'm not going to pretend to know the way this is going to go, but just from a technical analysis standpoint, if this breaks higher here, mortgage rates will drop. Okay? It's a weekly chart, so not going to happen tomorrow.
Yeah, and look at the 7-year and the 10-year is usually where a lot of this stuff gets based on. So even though if they may be raising the short rate, there's no reason why the 10-year couldn't collapse. I'm not saying it will. There's nothing making it stay at a level, so I think that's what Phil's talking about 2024. When they start doing yield curve control, they'll start buying down they'll start buying down the bonds that affect mortgage and credit cards and auto loans. You watch, and that's usually in the 7 to 10 year range.
So we're getting into this pocket here that we've typically seen them try to bounce price, and so we could still get that bounce back up into the range.
Yeah, they get everybody excited here, and then they'll do the WTF lift. Okay.
Yep. So that's why now 41.19 is important, because one of two things are going to happen here. Let me go to a 1 minute chart. We need to be a little more granular here. One of two things is going to happen. One is you're going to get a rejection off this. It's going to come back down. Or the other is this is just a head fake lower and it comes back in. And, both are doable. The way that this kind of just randomly came down to 41.08, that's not really much of a level, in my opinion. 4100 is probably more reasonable. But a lot of times when they head fake lower, they do ends up stopping at some random point to get back over the key level, which in this case is 41.19. And then that serves as the trap for lower, the bear trap, and then you get that squeeze back up. So if this came down to 40,
they went ahead and tried to test yesterday's low on SPY. Came within pennies of it.
Yesterday's low?
Yesterday's low.
Yeah,
yesterday's was 407.82.
Yeah, You know what? Let me, good point. I don't have my lobes on, but I wanted to keep this chart clean. 41.0550. If you guys want to watch a condensed version of this later, once YouTube has finalized the processing of it, I will condense it down and I'll upload it later. Get rid of the dead space and stuff like that. You can watch it at 1.5 times speed or something. So again, we had our range develop from the announcement, broke down out of the range. Announcement rules, algo rules are that the first side that breaks is usually the side of the bigger move. So we've established that should be short. We now know too that they like to come back inside that range later toward the midpoint of that range. The range high should not be broken at this point. That should hold and not be tested. And ultimately we'll see a push lower. If this market loses 4,100, the next big number would be, I'm talking SPX, so 41.9. We're already in trouble on the SPX. We'd have to get, this happened yesterday too. We got below this level and they stick saved it. See that? Nobody wanted to catch that. We actually got long this, didn't we, Robert?
We did.
We got long this, rode it up, And then we said, okay, we're going to take our exit and wait for the FOMC. So they've been buying this level. They're being a little cheeky here, not taking this low out, but I do think this low is going to go. 41.0550 eventually will go, but you know how salty everyone's going to be that's short and watching this thing come all the way back up to 41.50 first or thereabouts? Salty. Yeah. So don't be surprised if that happens.
The word I'm using, they'll be pissed. So market feels heavy though.
It does. Oil's energy is not looking great. Gold's okay. Bitcoin's a little heavy. See if the DXY is giving us more clues here. Yeah, see, I think the dollar wants more. I really do.
Yeah, I think so. And just for the secret decoder ring, Powell is blah 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 blah. Save the dollar. Blah 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 blah. Save the dollar. That's all he really cares about. Okay. They can couch it in whatever lie they want to tell you, but there's no way they're going to lose the reserve currency status for the dollar.
Right.
No matter who they have to punish.
Right.
And this notion that the dollar's going to lose it, don't believe it for a second. Okay.
This is our gap from basically a daily gap. A lot of times what'll happen if you get a daily gap from when the session closes from one day to the next, you'll see price revisit that. I mean, everything under this support line here has been bought. Overthrows a little bit, bought right back. Overthrows, bought right back. So pretty aggressive support here.
SARC is really moving up nicely now. For those who are listening that are subscribers that followed that trade, we are now nicely green. I think TWM is probably close to being green.
Yeah, watch this dollar trend line breakout. I would watch that. It's probably going to pop.
Look, Powell's not going to stop raising rates until he gets a meaningful sell-off in the market and just cure people of the instant buy the dip. They want people to be a little bit hesitant to touch the stove.
Sure. Yeah.
And I think that's what Australia did yesterday. Australia said, yeah, we paused, but we can raise. And, can you imagine people just got hammered?
Yep. Okay.
And you guys, we all want volatility in this market, okay? Because volatility cleanses the system. And plus, as traders, we'll make more money. The sad thing is they levitated this thing so beyond fair value that the pain of coming down off of this high is not going to be pretty. Wow. So we went all the way from almost 414 down to 408 today, Phil. 66 points.
Yep.
60-point ES drop.
Yep.
Yeah. That sells off even more into the close. The problem with people leaning into a short tomorrow is usually when they screw you. So you might want to just take a little off the top, put a little hedge on, and be annoyed that you have a hedge on and it kept falling. But
hot cake, that was the browser when you I think you hit F12 or whatever, and it opens up that box, source code box. That's all out.
So what's the function key that takes this market down, Phil? I guess it's the FU function.
Well, look how they're kind of being coy with yesterday's low here.
Yep. That's why I said you got to be careful.
Again, guys, if you could, if you haven't yet for the channel, if you could hit like and subscribe and notification bell and set it to all, that would be super awesome. We'll keep coming with the everydays if the channel keeps growing the way it is. So it's 343. The next thing that comes up is what we call the 50 algo and the 55 algo. And all that means is at 3:50 p.m. Eastern, an algo order fires off and, it's either up or down. And you can watch the reaction because it's usually a fairly aggressive move on the price candles. But that happens in about 6 minutes and we'll see. On a day like today, I'm not sure which way it'll go. There's one that fires at 350 and one at 355. A lot of times one goes one direction and the 55 will do the opposite. So if this does crack back above 41.19, then I can see a case to start grinding up and get this part of the move that I drew. And we may not even get to the 50% point, but that's more or less, give or take, the area that we would look now once this move came up in here to start getting short. And once you start getting up in here, that's where we start looking at our indicators and anything else that would indicate to us that the move is rolling over, and you can take that. Now, like I said, normally what that means is the top of this range, 41.67, is going to be left behind. Not going to get up there. And we're going to roll over. Now, could it come up later at some point to try and test it? It's possible, but not before this makes lower lows and finds liquidity lower. Now, where the liquidity is, you can look in the higher time frame chart and, obviously this low here right? From what day was that? Wednesday, April 26th. So you got that low there. That's a lot of liquidity hiding under there, I'm sure. That would be a downside target, 40.6875. You've got this area of inefficiency too. So you could backfill down to 40.22. That's a big gamma level. So if they really want a good move, fill that in there at 40.2375. That's a little higher than 4,000 SPX. That to me would be a great downside target for this move, for the initial move. If it slices through that, as Bob would say, buckle up, buttercup, because if that gives you no bounce, we're in trouble. Most likely what we're going to do is we're going to come back down and test this zone, which means we're going to be revisiting 3,900. And most likely at this point, I've marked off sub 3,800, basically this area here, this 3,770 area. We're coming, we almost got there a couple times, since this market has been trying to push lower, but we never finished off the job there. And I think we're going to get that, and that's going to actually kick off meeting up with this lower trend line and lower. One thing about these bear markets is you have these, let me find that trend line. You have these trend lines, right? You're going to get back to it and you're going to break down under it. When we break down under it, because I think we will, okay, that's going to really be the meat of the bear market at that point. And this thing's going to act as resistance as it did back up here too. Okay. And, I think we're going to take out these lows and we're going to see how low we go. I think 3,200 is very realistic. Sub 3,200, we got a big old recession on our hands, ugly one. But you also have to look at what was the pre-COVID highs. Pre-COVID highs were 3,394. I just think that that's just inevitable at this point. You're going to make, low here. That would make another low, a third low lower. To me, it makes a lot of sense that would play out like that, especially with the economic data that we're dealing with.
Sorry, I'm going to throw it on mute, Phil.
Yeah, that's fine. Yep. So they're being super cheeky with yesterday's low. They do that a lot in this market. And that's why a lot of guys will get positioned right above these lows because they can have a pretty tight stop. Because unless there's like a major sell-off happening where they just mow through levels. If they're mowing through levels, that's just broad institutional selling. You do not want to fade that unless you're getting into a big technical level. Otherwise, when it's big institutional selling, they don't care about prior day lows. They mow right through it. They got a job to do. This tells you that really isn't the case. The short-term traders are somewhat in control here of the flows. So what we call controlled demolition. So break the range, initial reaction off of 41.19. Back to the range low rejects, takes out 41.19, finding now acceptance here, and that makes yesterday's low and 4100 magnets. If we can get back above 4119 and get like this move here and get support, I think you have a good shot of testing the range low again and then cracking back inside that range. Now, this may not manifest until later tonight into tomorrow too. All right. So, trust me, once we start getting a move back up, they're going to say that, the market digested what Powell says, and they're going to be expecting, especially when you start getting this move back up toward 4150, you're going to hear Twitter talking about how we're going to go back up and we're going to close that S&P gap above. And just be mindful that, the way this market usually goes is they stop there at that level and reverse course. So, but you're definitely going to get people thinking, FOMOing into this move here when it comes back up. Not that it will. I mean, it certainly doesn't have to. This is all just probabilities. It would be the outlier move would be that this doesn't recover and we just keep selling off.
Yeah, and Phil, we're at the Qs hourly 144. So it's a pretty good roll down from the highs from yesterday on the Qs. If that breaks, then we have a gap fill all the way down in the 313 area, I should say.
This chart is dying. This is KRE. This is the regional banking ETF. This is all you need to know. We covered this in yesterday's video. This is not good. Really not good.
Yeah, there's a Spanish technical term for this. It's called no bueno. Okay.
Yeah, this is
you don't escape a bank collapse in your stock market.
This is the S&P 500 overlaid on the KRE symbol, and I'm telling you guys, whenever you get this much of a divergence in these two indices, let's call them, you're going to catch down to it. You're going to catch down to it. It's a leading indicator. It always has been. It always tells us whenever you see going forward, if the KRE is showing weakness and the market is not exactly talking about it or showing weakness, but you get these divergences, take note. It usually doesn't end well.
I don't think there's anything usual about it, Phil. You can't escape a bank collapse, guys.
No. And for everyone that's saying, we're in a new bull market, it started back here and we're grinding higher, not when this is happening. Never in the course of history of markets have we ever gotten a bull market in the banking sectors just crapping the bed. Doesn't happen.
Nope, you're dreaming.
if the bankers aren't happy, the market's not going to be happy. The fact that we're even up here in anti-gravity mode is very, very impressive.
Anti-gravity mode. That's a good one. We discovered anti-grav.
Here's an example. If we zoom in a little bit of, you had a divergence and, the market was having hiccups here, then it kind of recovered, but you had a lot of volatility that was coming into a market. These were back here. These were big drops in the S&P 500, big steep drops. And the banking sector was just falling away, so same here too, banking sector falling away. This market was like having really hard time getting going here, double bottom basically. And then the banking sector bottomed and then started to crank back up. But you can see though, there was a lot of like these drops were very, very dramatic. Then ultimately the banking sector grinded back up. This was back in 2020. So, so anyway, the point is that, 2020 obviously had its issues, right? With the economy shut down from COVID. And so if the banking sector is not happy or underperforming, usually that introduces a lot of downside risk to the markets. But in this case here, all that money printing came into the markets and eventually drove even the banks. And this tells you too, this has probably been a problem back since 2020. It's just that we've had all that extra money come in to prop up things. But that's the thing about this market. As soon as the money goes away, as soon as the training wheels are off, right, reality sets in. I mean, the banks are going to go back to their pre-pump levels, the pre-liquidity pump levels, right? That's because that's reality. And I believe the S&P 500 will as well.
Yeah.
All right, let's get back to the market action here and see how we're going to end this day. So let's say the 50 algo fired off and it was green, but we retraced that move. Market on close balance was 680 million sell side. Don't really pay attention to the market on close balances unless they're over $1 billion. But there's been a lot of sell side over $1 billion, 1 billion, 2 billion. Been a lot of that on this move up. So in my opinion, the bigger money has been selling into this move up into 4,200. And I think we're starting to see this thing roll over. Again, weekly chart, you look at S&P 500, this is major resistance. Or if you look at this on the SPX, same area on the SPX, major resistance. Okay, we're just not going to waltz through that level, not with liquidity going south. And liquidity is going south. How do we know? Because if we zoom in on a 1 day, look at how much liquidity is fallen off, right? And the market can't, it's wanting to go higher, but it's just not going to go higher if liquidity is falling off. This was a big jump from when they bailed out the banks and created that bank lending window to help the banks, expanded liquidity. What did the market do? Right up with it, right? Liquidity is going the other way. We're over fair value. We hit euphoric levels. When you hit euphoric levels, these are major tops, all right? This is all that matters. Fundamentals don't matter. Nothing else matters. This is all that matters right now. Will this always be the case? No. But until we get out of this Fed regime that we're in, which probably isn't anytime soon, this is all that really matters. So, Bob, we're going to release this pretty soon, though, right?
Yeah. I'm talking to Sean tomorrow. You have your stuff ready for it.
Mm-hmm.
Yeah. We're going to be selling this indicator out to you guys. It's free money. No matter what we charge, which won't be a lot, it'd be worth it.
It's a great swing trading tool.
Oh, it's a good check on your ego too.
Okay, so the S&P 500. Let's go back to ES here. So we touched yesterday's. Okay, so you can see here the games that they play, right? And this is why knowing where these levels are. Yesterday's low. There we go. We tagged it by a couple ticks and popped back higher. So, is that all they wanted? Are they going to get to 4,100? I mean, that one of these two levels could definitely put a short-term bottom and come back up, retest that level. And then this 4119 is going to be key as to whether or not we end up going back up and testing the bottom of this range or getting back into it. Still very much in play. Don't count that out. Where I would count that out would be if we got a substantial move below 4,100, because normally what I would expect to see is sometime between now and tomorrow, we get back into this range. If that doesn't manifest and we start just grinding lower and this market starts to accept under 4,100, we may have to abandon the idea that that's going to get back up there.
Yeah, you guys got to realize too. So there was a dot plot that was saying when things were going to pivot down. Tonight, all that's getting reprogrammed to maybe later. And so that's every calculation of every risk officer in around the world has got a little bit more conservative based on that. And so that's just going to make the market heavier. It doesn't mean it can't bounce. It's just that it's going to even have less participation. And so that's how these things work. It's just like we're basically the plane has run out of fuel. It doesn't fall straight down. It's going to glide, but it's going to be herky jerky. And so, and if Powell keeps up QT, it just accelerates everything. We broke yesterday's low on the Qs though, Phil.
We did so on ES as well.
And I'm sure IWM did too. I want to go check IWM out.
Let's see what DXY is doing here.
I don't know. Oh, IWM has much further to fall. I think that's your twisted sister for tomorrow. The Qs and ES have already broken it. The small caps have to catch down to it. I think a lot of them were thoughting that the banks may get rescued out of this. And remember, 14% of the IWM is financial services companies. I just don't see how they survive this.
Dollar's really volatile up and down.
Yeah, insurance companies, remember, they're in the same boat. You know, they in terms of they have to pay more for their. Yeah, I couldn't look at any comments today, guys. So I just had my one PC up. So what do you guys think? Let us know. I mean, you don't have to sugarcoat it for us. Tell us you want us to do something different with this, better, sounds good. Phil, keep talking. Bob, shut up. Whatever it is that you guys think would make this a better tool for you guys. We'd like to hear it. Also, give us topics. We'd love to talk about things that you guys want to listen to. So,
all right. So the cash market's closed.
Phil, I got a dollar buy on Kona into the close.
Yeah, we had a 4-hour fire off too on dollar.
So that's an hour and a 4 hour. It's pretty spicy.
Yeah, I'm surprised it hasn't really bolted. It's been chugging under this trend line, but it's kind of weird actually. This price action up, down, up, down, up, down. To me, I think I would have to lean toward this bigger trend line breaking up.
Yeah. Well, Powell essentially said he's supportive of the dollar through his actions. So
I think once this dollar gets the boogie in here, it's going to be pain for risk on.
Yeah. Jeffrey and Kyle are Jeffrey's telling Kyle that he must be from Fort Worth because he's always bullish. That's a good one. Jeffrey must be from Alaska.
John Doe, none of it matters. Only the Fed liquidity matters.
Yeah. Once you understand that, it's like the keys to dating.
Robin Hood. Well, Leaf, normally you'd have to get settled on your put, cash settled. So the dealer would have to make good on that, assuming you had puts on it. If you shorted the market, then it would be, essentially you sold the market a stock for a price higher, and if the stock is worth nothing, then you pocket all that money that you sold the market. You don't have to buy it back. Essentially, you buy it back at zero. You cap it's 100% move. You get cash settled out. Maple Girl, it's gonna come, right? It's gonna come. When VIX is at these levels, you just have to start legging into a position, and sometimes it seems like it always takes about 3 to 4 weeks longer than you think it's going to take, but it's going to come. So volatility has kind of died off here, guys. We basically double tapped yesterday's low. Again, 4,100 is a key round number. Don't be surprised if all this being equal holds, and especially if we start cracking back over 4120, don't be surprised if we actually start grinding back. So keep a note of this level here, 4130 on ES. That's approximately 4110 on the S&P 500. That's going to be a key level. If we start breaking above that, I think everyone's going to think that they've dodged a bullet. In reality, that 4150 area is going to be a big old bear level. Okay. And so that's the game. Actually, you know what? I actually have my midpoint drawn incorrectly here. Let's fix that. Only a couple points different. 41.49 technically. That's what we're looking for. Move back. Give or take. Yeah, natural gas, it's kind of the same thing where it's just taking its sweet time. You look at the weekly chart, weekly chart, I think it's doing okay though, I'm sorry, I'm looking at let's see. We are at 215. This is the weekly chart. So 319 is going to be big resistance, but take the back adjust off there. Here we go. You're either gonna hold here, right? Or you're gonna take out these swing lows. That's it. We start breaking down under these lows, breaking under $2. You got to start gunning for these lows down here. $1.50.
Yeah. IWM came back to its moving VWAP for the close, Phil, on the hourly.
I don't know though, because here's the thing. Seasonally, okay, we should see this thing at least get back up to this swing low here. First target's 298. I kind of think this is going to hold just because we're going into a very seasonally bullish period of time. So I actually think this is going to base out here and go higher. I'd be really surprised if this breaks, this 196 turns into resistance, and then we head down to those lower levels. We are really cheap historically for gas here. So that's my feel on that.
Mm-hmm. IWM stayed stayed green today. Qs were down. SPY, I think, was down. So interesting.
Yeah, I see. Here's that little lift now going on. So notice, this pressure on during the cash session. The cash session closes, and you're starting to get a drift higher. Would not be surprised if this starts to grind back up some of this move from today. So just keep that in mind. Keep those levels in mind going into tonight and into tomorrow. But ultimately, I think we're going to go lower. And like I said, some of those levels we talked about earlier, I think we're going to see those come into play. And I highlighted those levels here on ES. So looking at 40.68.75 and 40.23.75, I think those are probabilities of those coming and getting hit very high now.
Good. Well, Phil, what do you say we pack it in? You've been going for 2.5 hours, pretty strong here.
I need to get a drink. And so guys, thanks for watching. Please hit like and subscribe, all that good stuff. Smash that notification bell. We'll see you on the next FOMC announcement. I think, what is that, July? For live stream?
Usually 6 weeks out. So I would think middle of June.
Middle of June. All right. See you. We'll do it again middle of June.
Yep. See you tomorrow on our podcast.
Yep. In the meantime, check out our podcast Monday through Saturday.
Adios, amigos.
See you guys later.
Trade Genius.